Good afternoon, ladies and gentlemen, and welcome to Steel Mint Engage 2.0. We are into the concluding day of our 5-day webinar series, where we have already had several very informative discussions on an array of topics. So Engage 2.0, Steel Mint is reaching out to industry leaders to understand their perspectives on current issues and challenges in the steel and related industries so that our clients can have a better understanding on how each sector is likely to unfold in the short to medium term.
We also would like to take this opportunity to thank our esteemed sponsors for the event, NMDC, JSW Steel, and Tata Steel. Also, we would like to take this opportunity to thank our supporting associations for the event, ISA and Ministry of Steel. Your hosts for this session in the afternoon is Nisha Mukherjee, GM Iron Ore and Scrap at Steel Mint.
And I'm Madhumita Mukherjee, Editor, Steel Mint. In today's webinar, we will be discussing changing trade dynamics of the global steel market. A very relevant topic indeed against the backdrop of the recent developments. A lot has been happening on the global frontier ever since the onset of the pandemic 2 years back, which upset the economic balance in every country that was ravaged by it. All countries had to resort to stimulus measures to reinvigorate their economies and bring consumption back onto the table. Steel and its downstream sectors were badly impacted, as we all know. Trade dynamics needed readjusting. But before the world could get over the Omicron wave, geopolitical tensions have become a cause for concern as input materials and energy prices are going through the roof. Russian and Ukraine supplies are getting cut off. How will mills sustain production against this backdrop? Where are prices headed? We have a panel of experts who will throw light on the current trade dynamics and the way ahead. Let me introduce the three esteemed panelists first. Mr. Gesung Matthew Lee, Director of POSCO International India Private Limited. POSCO International is a South Korea-based global trading unit with offices in more than 60 countries, and it is the largest steel trading firm in the country. Mr. Lee has over 13 years of experience in international steel trading and is currently handling both import and export activities of all steel-related products such as raw material, semis, flats, longs in both carbon and alloyed segments. He is not only promoting POSCO products in India, but is deeply engaged in exporting Indian steel products to the global market. He is one of the key Indian steel promoters and has been bringing more opportunities to the Indian steel industry. Our next panelist is Mr. Rajesh Agarwal, a steel trading consultant with more than 2 decades of experience in the industry. Mr. Agarwal is actively engaged in assisting companies in trading in bulk steel, both flats and longs, out of India, as well as into the neighboring markets of Sri Lanka, Bangladesh, Myanmar, and Nepal. Mr. Agarwal was previously employed with industry leaders such as JSW Steel, Temcor, Cargill, and Tata International, where he was responsible for the Indian subcontinent, Middle East, and African markets. A third panelist is Mr. Apramey Saxena, Chief Marketing Officer, Vedanta Sasagoa. Mr. Saxena has more than 13 years of experience in metals sales and marketing. He has undertaken leadership assignments in non-ferrous and ferrous marketing in both India and internationally. His areas of interest are business development, market research, commodity hedging, and digitization. Over to the panel now. I invite Mr. Lee to speak now.
Thank you very much. Good afternoon, everybody. This is Matthew Lee from POSCO International. So first of all, I would like to thank you to Steel Mint to invite me to such an event and provide me such a platform to share my view. Being an international trader, I reckon it would be very nice to share my view and to have an opportunity to discuss with other players. Today, I'm going to share my view how the global steel market has been evolved. And the Steel Mint actually asked me to review the market behavior in 2021 and to forecast in 2020. 2022. But while I was thinking the topic, I have decided to move the lens a little backward to see the macro view, which can tell us the where we are heading to. And I'll share my finding based on the macro-ish approach. It has 3 chapters: internal changes and external changes, and also the moving forward. Internal changes will talk about the change within our steel industry over the 4 to 5 years, and the external change is rather recent but pretty much impactful. And then I will share a bit of the direction that I would believe in, and then we can move on to our Q&A. So here we go, the internal changes. This is the country that is so-called, we can just call it as a major player. In 2020, the world produced 1.88 billion metric ton of the steel, and in 21, it produced 1.9 billion tons. And those 20 countries above has accounted for the 93% of the steel produced, and they consume 88%, and they only exported 75, and they only imported 52, which means there's an imbalance, and those countries that further below is the one who has imported quite a bit. And now, I'm going to use this kind of the chart to show how the change has happened. So what we can see is there is almost 2 billion tons of the steel has been produced. However, as you can see, the trade has been decreased. As you can see, and I'm also going to use like a three kind of the chapter. The one is the production divided by use, which is we see how much of the consumption has been made, and export divided by production, which show that how much export has been made out of the production. And import divided by the consumption will tell us how much the volume has been imported. And as you can see, actually they are producing more, but they are actually trading less. And this is quite a big finding that we will see. And then now we see some of the countries which show some significant changes. And of course, we can't just start without talking about the China. So if you look at the Chinese, actually they're looking quite good. They're producing quite the big volume, and they're using quite the steel. They're using quite a bit. But in terms of export, they're exporting less than 10%, and they're only import 2%. It seems quite good and balanced. But what we can see is that in terms of the export has been changed. So they are exporting less and less and less. If you think about how the change has been made, and this is a bit. So in 2016, there is a huge volume of the Chinese was exporting, but in 2020, the market share of the Chinese export has been dramatically shifted, which is the big finding. And look at India. India is a bit different. So India has been now the export country again. But also the thing is that they are getting self-sufficient. As you can see, they're importing less and less. And what it means, India going to export more and more. And our mother company, the POSCO, also has an MOU with Adani. It's going to make the huge input into India, and JSPL and JSW and AMNS, they both are going to put a huge investment, which means that there will be huge incremental for the production and consumption, which will come out on the export market as well. And also I want to see how the Korea and Japan has changed. As you can see, they are not really, they're a big player, but as you can see, they are quite a big exporter. Around the 40% of their production from Korea side go to the global market. And in terms of the Japan, around 40% has been going out for export. So which means that they're producing quite a big volume. However, they are the big player of the export market. The changes are they're trying to reduce their production. In terms of the Korea and the Japan, both have turned up their blast furnace recently, which tells that they will be quite strong, the trade player. However, they will be a little less active than it used to be. And also we have to talk about the Russia and Ukraine. If you look at it, the Russian and actually their consumption is just half of their production. And if you look at the Ukraine, the export is around the 70% level of their production, which means that the impact of the global steel trading, those two countries having a very important role. And that we see that how this European market has been situating at the moment. And then we will also this the huge demand is coming to India and the other region. And now I have to address those two countries, which is significantly changes very recently. So if you look at the Vietnam used to be a huge importer. So only production, the consumption, the local consumption, local production just only 35% in actual use of the Vietnam in 2016, but now they're hitting 85%, which means that they have increased the huge domestic production and they're getting the self-sufficient. And how about Indonesia? Also Indonesia, they show the similar patterns of the increase. They are no longer just importing country, and now they're becoming also export market. And the change is quite dramatic. So we also have to think about again, those two countries is no longer just importer. And how about the Turkey and Saudi Arabia, which is quite the big changes. If you look at the Saudi Arabia first, actually they also show the similar changes like Indonesia and the Vietnam. They have increased quite a big volume of the production, which means that they also need less of the steel import. And very interesting point is the Turkey. So in terms of their product and consumption, it's just quite balanced. The point is they're exporting almost 40 to 50% of their production, and they're also importing around 40% of import, which means that they're having a lot of the value added activity. So rather than their actual consumption, they're buying a lot and they're exporting a lot. Now it tells us how the Turkey is situated in the global trade market. So this is the external changes we can see and how this changes has been made. This is about the three topics. The first is the ocean trade, and second is energy and the commodity price. And I think also it is very important to address about the ESG factor. First of all, the ocean trade, it has been changed very recently in here after the COVID. So until then, over the 10 years, actually, we don't much cares about the ocean trade. It was like a very inelastic prices. Whatever the prices, FOB prices, just we can simply add it up like $20 or $30, and that just makes the sense to everybody. But now what happened? This fluctuation over here is a huge, which means that no longer just we can just assume that what has happened, which means also giving the big impact on the global trade. So now and then at the moment, the price has been rising again, and then we actually in very uncertain situation, what is going to be the next. But what we also have to address it in 2008, actually there was a huge impact has been made, but now no one remember what has happened in 2008. So now we have to just relook again how this like expensive delivery cost in terms of the global trade. And in terms of energy and commodity price, now just this is like the needless to say, and in ocean trade, the oil prices and gas prices, even the coking coal prices, which is quite giving the big impact on the India as well, and then iron ore price, it just driving everybody crazy and uncertain. And then lastly, also we have to talk about the ESG. Currently, the steel industry is amongst the three biggest producers of the carbon dioxide. And therefore, we used to talk about, still we are talking about the size, spec, quality, and Incoterms, the shipment and price gadget. Now also we have to talk about the certification, how green we are, how green the product we can supply. There will be another change in terms of the global trade. There will be certain industry which you can buy those certified items. This is not about the quality, and this is not about like ISO 9000. Also, we will have to think about how this change will impact on the trade. So what should we do? This is a very important question, and this is a very open question to address. But I would like to just make the 3 points. The first is the multiple pipeline, and second is the risk taking. In terms of multiple pipeline, is like the role of the trader is more important than ever, because trader needs to introduce the more supply chain to the both buyer and seller. So there was a Chinese, the absolute, the kind of the crown of the steel trading, but there's less Chinese. But like I said, India is the booming, and Indonesia is booming, and Vietnam is booming. So there is a certain opportunity comes, but only the ready one can take this like opportunity to actually make the trade. So all the buyer and seller need to just open up and try to make the more pipelines, as many as possible. But to do so, we also have to face about the risk taking. What it means, So the price is important, but now also we are just looking into the allocation. The allocation matters too. So there is a tendency. I used to buy this one, so I will continue to buy this. But we need to try out unfamiliar origins and unfamiliar manufacturers. Yes, doing this unfamiliar needs, it costs. But however, it will be worth it, because when all the trade dynamic changes and there's only one who get used to this like a new, the challenges, and there will be, they can get the reward. So I'd like to just point out all the like buyers and the sellers. Try to be less picky. So we have to open up. So we have to discuss more, not only price and quality in terms of the operation and the other matters. Once you know each other better, and then you should be able to have the more opportunity. So what do we need to do? So this is what the Alvin Toppler mentioned very early. So we have to learn the new things. But how do we do so? So we have to first unlearn what we know. All the legacy that we have in the steel industry or the steel trading is not as useful as it used to be. So we have to keep it up. We have to unlearn the things, and then we have to face it, and then we have to relearn, and then we should be able to manage the future. Thank you very much.
Thank you, Mr. Lee, for that very, very revealing presentation. And now over to Mr. Agarwal. I request you to speak, sir.
Sure. Hi, everybody. I hope you're all safe and doing well. Allow me to begin my presentation with first a quick look at the year that was. Nishta, could you please help share your screen?
Yeah, I hope it is visible, sir.
Yes, thank you. So we first go on to the slide number 1.
Yeah, I have changed the slide, sir. I hope it's visible.
All right, just give me a sec. Okay, sure. So when we look at last year, the total global seaborne trade for steel was estimated to be about 425 million metric tons. In this slide, you can see the top 10 steel exporting countries. As you will note, despite the export rebate withdrawal and production curbs, China was the top steel exporter at about 67 million metric tons. And that's a 25% jump over the previous year. Japan was second with about 30.6 million metric tons. And Russia was third, very close behind, with about 30.2 million tons. Most countries' export volumes increased over the previous year. We now move on to the next slide, which shows the top 10 steel importing countries for 2021. Okay. Okay, in this slide, we will see that the EU was the top importer with about 34 million metric tons as the topmost importer, and that's a 4% year-on-year increase over the previous year. It is to be noted that out of this 34 million tons, about 15 million metric tons, that is almost 44%, came from just Russia and Ukraine. We will talk about this further in a little bit. The US was next as the second biggest importer at 25 million metric tons, and that's a 50% jump year-on-year. This was followed by Italy as number 3 with 17 million tons, rising almost 30% year-on-year. China was in the 8th spot with a 30% year-on-year drop. China was a drop to about 12 million tons. Except for China and Vietnam, rest of the top 20 countries showed a year-on-year increase in imports. We move on to the next slide, where we should also talk about the production cuts in China last year. As we know, China decided to cut steel production last year, and the total steel production was 1033 million metric tons. That's a 3% drop over the previous year. We now move on to Russia and Ukraine in slide number 4 and 5. Just very quickly, if we review the exports from Russia and Ukraine last year, we will see that Russia exported about 30 million metric tons of steel, while Ukraine exported about 20 million. Together, their 45 million ton exports is almost 10% of the global seaborne steel trade. The other point to be noted is that the biggest importer of steel from Russia and Ukraine was the EU. Another thing I'd like to highlight is that out of the steel exported by Russia and Ukraine, almost 70% of it was in the form of billets and HRC. With this backdrop of last year, we come to the outlook for the rest of the current year. At this juncture, obviously, no one knows when the war is going to end, what are the full implications of the sanctions on Russia, etc. But I will make an attempt to highlight a few considerations that can be applied for decision making. First, we can talk about the supply disruption. As we just discussed, last year, Russia, Ukraine accounted for exports of about 45 million tons of steel. So the obvious question is, where will these additional tons come from to make up the shortfall? Is it going to be China? As per the blue sky policy, China is not expected to produce more steel this year than in 2021. In fact, there have been some reports that China may actually produce less crude steel in 2022 as compared to last year. That said, I personally feel that there will be certain products that will be exported in higher quantities by China as compared to last year. Next, is it going to be India? Well, last year, India exported about 20 million tons of steel. But given the robust domestic demand, it would appear that domestic mills will prioritize meeting home demand over the exports. Again, I personally feel that India will export more in 2022 and fill some of the gaps created in the EU and the Middle East, North Africa regions. In addition to the exports from the large mills, I also feel that some of the secondary mills in India that are producing good quality steel, they will have opportunity to export bigger volumes, especially to the neighboring markets. How about other origins? Well, Turkey, we expect exports from Turkey to also increase. In fact, we already saw that last few days, Turkey has increased their export bookings. In addition to that, I think also Asian mills in Vietnam, Malaysia, Indonesia, they will also try to increase their exports. We should also talk about freight rates. I think Mr. Lee has discussed quite elaborately. So I will just say quickly that personally, I feel freight rates are expected to remain high. As a result, the trade flows will tend to be more and more regional. Let's move on to the financial aspects of the global steel trade. Due to sanctions on Russia, will there be a parallel trade similar to Iran? I personally feel it is quite likely. We talk about price. It's extremely challenging to forecast an accurate price trend, but given the uncertainty, I think it's highly likely that prices for 2022 will be higher than last year. So higher prices will lead to challenges relating to working capital. We all know that bank provided working capital limits, those do not increase in proportion to the increase in steel prices. Therefore, one will not be able to transact the same volume of steel as in the previous year. Then comes the question that looking at supply disruption, how high can the prices go? As prices go up, more and more origins and more mills will try to enter the export markets. We have already begun to see this during the last week. On the other hand, steel sellers will try to pass on their increased costs to their customers and end users. It is quite probable that end users will push back and start to offer resistance to these higher prices. As resistance builds up, prices will start to retreat from the new peaks. Also, I feel that globally, as economies have been seeing higher inflation, and further due to the recent increase in energy prices, supply chain disruptions in steel and other commodities like food grains, etc., I think the inflation will tend to increase even further. That being the case, we should expect that governments will be compelled to increase interest rates. Now, the rising interest rate regime will once again create financial challenges and will also be a reason for end users to resist price increases. In conclusion, I think the current scenario has definitely brought several challenges for us in the industry. And it is now all the more important to be cautious and diligent about how much, when, and with whom to transact. How we manage our working capital, how we manage our price, currency, and political risk. With extreme volatility here to stay, I think this is also an opportunity for industry players to apply their astute and agile decision-making skills and derive a competitive edge. Thank you.
Thank you, Mr. Agarwal, for this very detailed presentation. Now it's over to you, Mrs. Saxena.
Good afternoon. I hope my slides are visible.
Yes, it is.
Thank you very much, Steelmint, for this opportunity. Thanks for all the delegates who are here. Just a second. So, since I come from an industry of pig iron, my presentation will be focused on one particular product, which is pig iron, and we'll be talking about changing dynamics of global pig iron market. This is, of course, a mandatory statement and disclaimer. You may read through it, but summarizingly, it tells that we make no representation or warranty on the accuracy or completeness of the information presented here, and we do not undertake to update our forward-looking statements. Right. So, coming to Indian pig iron market first. Now, there might be a lot of debate on this, but what we did is that, and we'll come to that in the next slide, is that we did a supply side analysis, because we have found that doing a demand side analysis in pig iron is very, very difficult, because it is not a stable market of pig iron consumption. The consumers switch from pig iron to scrap, to pooled iron, to GPI, to different products, and also the mix keeps on changing depending on the demand and prices, right? We think that it is around 4 million tons, so 3.8 million tons. And while when the prices were low, you could also argue that it went up to as high as 5 million tons, 5.5 million tons. But I think, you know, in this scenario, it is more near to 4 million tons. And East is such a big steel hub that almost half of the demand is from the East and the rest half from rest of India. As far as supply is concerned, India is a bit surplus now with 4.5 million ton production. So we have a pig iron capacity of 7 million ton. Again, it is very contentious because there are many steel mills who have the capacity, but they will decide whether they want to produce pig iron or not, depending on the price and prices of the other metals and their order book, right? And production is around 4.5 million tons. Import is very less. It's around 16,000 tons, which is hardly anything, and it is of special grade, sorrel grade, nodular grade, with very low force, titanium, and all of those, and probably a pointer for Indian producers to produce this grade more. The export So we saw India is surplus by around 0.7 million ton, but the export we saw in just the 10 months till January, they stand at 1.14 million ton, which is of course an increase of 32% compared to previous year to date, which also means that the domestic market was not even 3.8 million tons due to COVID in the first quarter and maybe some other issues in subsequent quarters. But so that's the reason why India was able to export more than 1 million tons, while the surplus is only around 0.7 million tons. A major export from India were to China, US, Taiwan, Oman, Turkey. Yeah, this is not an exhaustive list, but more or less this is where pig iron demand comes. Right. So this is the supply side view of pig iron that we tried to do. It's interesting because it not only talks about the pig iron manufacturers, but also steel plants, right? So what are steel plants doing, and how much the percentage of production from integrated plants, and then the estimated yield of hot metal to steel, and out of that how much pigs are produced, right? So this is a guesstimate estimate, but I would say it's a pretty good estimate. And this is the pig iron non-captive from steel plants, and this is from other pig iron producers. So all in all, what we see is that from a steel plant around 1,75,000 per month, and 25,000 per month from other steel players, and 112 from the three major pig iron producers. It comes into India for sales. So to summarize this, total demands comes around, at least for FY22, comes around 3.8 million ton, or maybe less, because if you take out the effect of Q1. Total production of pig iron from steel manufacturers, integrated pig iron manufacturers, and MSMEs for FY22 is 4.5 million tons. Now, India has, as I said, a potential of 0.8 million ton of exports, but due to unprecedented decline in domestic demand in the first half of FY22, which was largely due to COVID, exports increased by more than 40% and our potential. With current installed capacity at 7 million tons, so for example, if India starts actually producing that much pig iron, 7 million tons, then we'll see then we'll see more of exports, because domestic market can only take that much. These graphs are courtesy of Steel Mint. So we know major pig iron. We saw who are the major steel exporters and importers. This is major pig iron exporters and importers. So what is very stark here is that Russia is number one. Ukraine is number 3. So if you see first 4, India is 4. Brazil, we all know, pretty good. And I think, and in this crisis, Brazil has become the topmost exporter now. And thereafter India. Imports, yes, go to the consumer markets who are short of pig iron, like US, China, Italy, Turkey, Germany, Bangladesh as well, recently coming up. The global steel trade shrunk a bit in calendar year 21, which was last year, January, December, just because China decided that will not produce much. So because of those production cuts, China being such a large consumer and producer, the effect was global seaborne trade shrunk by 3.4%. And Russia had prohibitive export duty. And so that's why from the Middle East and from Turkey and all, and especially for the USA, they were more attracted to non-Russian. But of course, when the war started, then there was no other choice. And another point is that the US EAF market in steelmaking is expected to rise sharply by 80 to 85% by CY25. So this is slightly longer term, but we are already seeing the effects, because they are on that path with an additional 14 million ton capacity to be announced by 2024. So US is going to be a major consumer market. This is where a major part of demand for all steel products will come, but especially pig iron. Now, as far as Russia-Ukraine crisis, we see the analysis. Again, the graphs on the left side is courtesy of Steel Mint, and the right that's Ukraine pig iron exports and Russia pig iron exports. Now, what we are seeing now is that it is already coming down based on the kind of inquiries Indian producers are getting from all over the world. Of course, the rising sea freight has made it very interesting. So it's not just where you would get your pig iron from, but also at what freight you will get it from. This has come into the mix. And we all know Russia is the largest pig iron exporter, and Ukraine third largest. And with this ongoing crisis, countries like EU, US, and Turkey, they are looking east. Of course, everyone is looking at Brazil as well, but I guess US, because of close proximity to Brazil, will have the lion's share of Brazil's production, and everyone else will look east. India, of course, is best poised to, because we're already a surplus country, and if we increase our pig iron production more, then we are best poised to cater to this demand from Western Hemisphere. And with the current market scenario, we feel that the prices will support for any kind of business that one wants to do. I'm not touching on the prices, but I guess this graph is a bit old, 5th March, but nowadays we say every day we see a new price graph. This is a direct result of what's happening in Russia and Ukraine. So prices are on the up, and we don't see any opposite kind of movement there in the near future. Thank you very much.
Thank you, Mr. Saxena, for this very well analyzed presentation. In fact, all three presentations are actually vying with each other. Each one is so good in itself. Now we have a few questions for the panelists. I have a question for Mr. Lee. How are India's plastic exports being impacted by the Russia-Ukraine crisis, Mr. Lee? Do you see any market shift, any product shift? Are you noticing any trend already?
If you don't mind, just can you repeat the question again, please?
Yeah, Mr. Lee, the question is for you. How are India's flat steel exports being impacted post the Russia-Ukraine crisis? Do you see any market shift, any product shift, any trend in the product or market shift?
To answer that question is India is having, unfortunate situation of the war, but in terms of the trade segment, actually, India is quite getting a benefit. It was a very beneficial position in terms of the replacement. And we mentioned about the ocean trade and everything. India is geographically very nearby to the Europe and the Middle East and North Africa. And those countries who is getting the raw material from like the slab and the pellet, all the flat products, they used to buy from Ukraine and Russia. And another route of the substitute has to be India. Of course, and there is other market, but in terms of the geographical, the proximity, India has to be the one who can deliver the shortest time. Therefore, I believe that India is getting benefit in the current warfare situation.
Thank you.
I think next question from my side for Mr. Matthew would be that do you see Turkey emerging as a new market for Indian HRCs? And also, I think we have got one question in the chat box also on the similar lines that with today's announcement by Turkish ministry, so do you see how will it impact the Indian HRC export segment?
Turkey is a rather complicated relationship, I would say, because in terms of the Turkey government, they not only have to protect sort of the steel mill, but they also have to protect those steel users as well. But the user is not only the fabricator, automotive, and there is other value added producer, such as rerollers. So, and as I presented my presentation, the uniqueness of the Turkey is not only producer, also they are converting the steel item into the other downstream product. Therefore, it would be very difficult for the Turkey to actually put any bar in terms of the trade. Actually, that could be quite a suicidal decision for the country itself. Therefore, of course, they have to protect it, but it would be a little difficult to actually put the bar in terms of the trade.
I see. And a quick question on Indian front. Have you heard of any recent HRC import bookings being done recently, considering the sharp hike in domestic prices?
Not really, as far as I know, because India is well protected in terms of the duty, and also the BIS is having a significant role. And because of that, and because of the COVID, and it was a little slow to have the BIS approval about 2 years. So there's a new suppliers overseas, they want to get a BIS. On the other hand, it was a very troublesome to get it. So, and then also duty is there. So India is quite well protected to having sort of the non-FTA country origin.
All right, thanks.
Thank you. Mr. Agarwal, I have a question for you. How do you see the impact on Indian players, Egypt revoking the safeguard duty on billet imports?
Sorry, what about the safeguard duty?
Yeah, how do you see the impact on Indian players of Egypt revoking the safeguard duty on billet imports?
Oh, okay, yeah. So already I would say for the last 3 months, Egypt has been actively importing billets. Especially I am aware of a few consignments of billets having been exported from India itself. And with these new developments in Russia, Ukraine, I feel the focus of exports from India from moving goods to Southeast Asia will shift westwards, and there will be more regular flow westwards to East Africa, North Africa, and the EU markets in general.
Thank you, sir.
So I think one question from my side for China billet imports. What's your view on the current scenario and near-term outlook? Do you see China will again be back in importing billets?
Nishta, to be honest, I think this is a very difficult question because I think China is very difficult to read. But I will try to make some assumptions and make a guess on this. I think in the near term, very unlikely that China will import billets. At least in a significant way, what we saw, let's say a year back, etc. I mean, China of course keeps importing, exporting due to arbitrage, price arbitrage, but I don't expect in that, let's say in the next 2 quarters that China will import billets in a big way.
Right.
And I mean, sir, to continue with that question, I mean, what factors would be making China take this decision?
I think first is, I think part of it due to the blue sky policy that, the production has to be contained and it should not be increasing. On the financial level also, things are not as good as they were in China, if I may say, so let's say a year back. We also hear about people pulling out of money from China in the financial markets and moving money to other markets. So I think overall China, and we also heard about drop in forecast for growth numbers in China. So I don't think what we saw a year back is going to be happening again soon in China.
Right, thank you.
Thank you, sir. Now we turn to, I think, Saxena. Mr. Saxena, next question is for you on pig iron prices. We have seen a sharp rally in Indian pig iron prices in domestic front as well. So what would be the key factors that are driving it, and what do you feel on the future? Like, do you see further hike in the prices in the near term?
Look, Nishta, I would like to, refrain commenting on what will happen in future as per our policy. But I would say that the reasons for pig iron prices hike are very visible for everyone to see, because not a single commodity has been untouched. Not just ferrous, talk non-ferrous as well. Thankfully, in non-ferrous we have something called LME, London Metal Exchange. So everyone wants to accept that readily. When it comes to steel, people are not able to. For some time, they are not able to accept the prices, right? But if you see HR, if you see CR, billet, rebar, everything, right? The whole index has gone up. And the reason is only the war conditions between Russia and Ukraine. When one of the two largest exporters come into this kind of uncertainty, it will impact the globe and Indian market. And I think every market nowadays is globally benchmarked. So it's not that if something happening globally, it will not affect India. If the prices go down globally, the Indian prices also go down. So I think that's a correlation. What will happen in future? I'm sorry, I would like to resume my comment on that.
No problem, sir. Thank you so much. And I think the next question, a common question that I would like to ask first, Mr. Saxena, that how has the freight rates changed? Yesterday in ferrous scrap section also we saw, sharp hike in containers and bulk freight rates being told and discussed. So what are your views and your comments on it? How has been the vessel availability and freight rate changes in the recent past?
The question is to me, right?
Yes.
Okay. Now the vessel availability has been there. I'm talking about bulk vessel. The vessel availability has been there, but at higher rates. So if you are able to pay more, the vessel is available. If you are, if you don't want to send anything near Black Sea, where the war is going on, the vessel is available, right? So vessel availability is there, but at a much higher rate.
And Rajesh, anything you would like to comment, especially with respect to billet freight rates and to the key markets from India?
Yeah, so a couple of weeks back, we saw that the freight market was, loosening and rates were once again coming, let's say, workable for trade. Not back, of course, to last year's levels, but, still not bad, still pretty reasonable, I would say. But again, the rates have started going up quite a lot. Certainly impacts trade in a commodity like billets. And therefore, I think the trade will be more and more regional, as I mentioned, as far as possible. Of course, looking at the situation now with Russia and Ukraine, for example, Egypt or Turkey, they don't have too many options. So they will pay the higher freight rates. But in general, it impacts the billet trading very adversely.
Thank you, sir.
I have a question for Mr. Agarwal and Mr. Lee. Are there any indication on flat steel quotas in European Union post the Russia-Ukraine conflict escalating into a war?
I will defer to Mr. Lee for this.
You mean whether the EU lifted this like a quota, right?
Yes. European quotas. Have there been any changes? Have there been any, any indications from, out of the European Union?
Now I think that is everybody's hope because of the quota end by the June. Their quota, the cycle happens by the July to the next year of the June. So therefore, actually, we are expecting the new quota will be refreshed. And with the last year, when the European has a huge shortage because of the COVID, and everybody was hoping that the quota will be lifted, but it didn't happen. And this one is but it's a very personal idea because this war situation, and then the economy is not as good as it used to be. So just lifting it up, actually, that is also could be controversial in terms of the political situation. So I think that they want to continue at the current quota, and they may just think about how to just keeping the regulation there, but what is the other exception they can take. So I think that is the one kind of policy they would consider.
Okay. Is there any possibility of increasing the quotas, considering that they're getting cut off from supplies from Russia and Ukraine?
That one actually I can't comment because I wish I have some idea.
Now we do not have too much of time, so we can take just one question from our attendees. Just a second. This is a question, I think, for Mr. Saxena. With Brazil having high phosphorus content, pig iron production, and the USA generally being a low phosphorus market from the pig iron perspective, will India be able to be a major exporter to US?
I would say yes, but it has, let me put it that way, it has nothing to do with phosphorus because Brazil has always been there, India has always been there, right? Whether or not India will be an exporter, a big exporter to US will depend upon what are the landed price in US, what is the situation in the CIS area, because other than Brazil, only other alternative is Russia and Ukraine, and what are the sea freights. So I think these things will decide because India, if you see, is also, India has all kinds of grades. India is not just low phos. India also has all kinds of grades. So I would say that more than anything, prices and related things like ocean freight will determine. In near future, definitely we see Indian material going to US, but rather than phosphorus, price will decide.
I'll just squeeze in another question also to Mr. Saxena. Ukraine is a major exporter of pig iron, and will the current scenario benefit Indian suppliers? Asked one of our attendees. If you could take that. Did you hear me?
Sorry, I only heard that Ukraine is our major supplier.
Ukraine is a major exporter of pig iron. So will the current scenario benefit Indian suppliers?
Yeah. Yes. Hi, Kush. So I think, yeah, not only Ukraine, but because of Russia and Ukraine as well. Of course, it will benefit Indian suppliers because it opens up more markets, and because of the whole price index is up, it opens up that possibility as well that even after high ocean freights, India is able to export. So yes, definitely.
Much as we want to continue with this session, there are time constraints, and that was the last question that we could accommodate for this afternoon. Questions which could not be answered in this session can be resent to us, and we will get these answered later by the esteemed panel members. So we have to bring the webinar to a close now. Again, a big thank you to our esteemed speakers, Mr. Matthew Gerson Lee, Mr. Aprama Saxena, and Mr. Rajesh Agarwal, and to our viewers for joining in.
Thank you. Thank you so much.
Thank you very much.
Thank you very much.
Bye-bye.
Thank you so much, everyone. This is Nishtha Mukherjee signing out.
We would also like to thank our esteemed sponsors, Tata Steel, JSW, Steel, and NMDC once again, and the Ministry of Steel and the Indian Steel Association for their relative support. Thank you. I'm Madhumita Mukherjee. Bye-bye.